everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is the U.S. Mid-Session Brief. Today, we've got a lot to go over. I think that we're going to be in some serious good business. We're going to be doing some good business here in the next 24 hours. Absolutely huge news cycle. We've got EU CPI. We've also got the Fed announcements, which everybody's eagerly awaiting. We're going to give you a nice preview of the Fed. We're also going to talk a little bit about what's going on with our today's U.S. retail sales. That's our fundamental of the day. Let's get right out to price action, though. I had a question earlier today about the Euro USD. Dibble, good to see you, Dibble. Mark Corp, good to see you. We got a question about the Euro USD. Shane, what do you think? I actually drew up some analysis for the Euro USD today, and we're going to be releasing that inside the trading room relatively shortly. If not, it's already out there on X, LinkedIn, all the above. Bruce Gordon, good to see you, Bruce. This is big. This is a Euro USD. This, I would say, for all the major pairs over the next 24 hours, this news cycle coming up for Wednesday is absolutely huge for the Euro USD. EU CPI, we're expecting that to come in hot. Also, we've got the Fed announcements as well, and that's going to send the U.S. dollar crazy against the majors. So this is sort of the schematic. This is what I see happening coming our way for the Euro USD. A couple of things. Number one, 2024's high. Be aware of that. That's August's high. That's right around 112. Probably going to be some shorts dug in front of that. I don't really want to trade that necessarily, but if you're an order block trader, it's really tough to pass on, say, an order block, a daily order block like that. Typically, that's going to be one of those areas where you're going to see maybe a little bit of supply come into the market there and potentially an intermediate term ceiling. If we do break above that 112, we're looking at 2023's high, which is sort of a long-term number, I understand. But remember, markets have memories, and it's very important that you really have these things ironed out for yourself and on your charts. So right there, your high, 112.75, that's 2023's high. So that area between 112.75 and 112.01, more than likely going to be fairly stiff resistance. Now, we're not there yet. We're not there yet. So the question was, or the statement was, Shane, I've got a long going on the Euro USD. What do you think? And I say, yeah. I mean, I don't particularly mind being long right now. Personally, I'm waiting for a little bit better trade location, maybe right down there at 110.92-ish, somewhere in there, a nice daily 38% retracement. But if we do get a chance, right now we're trading 111.12. It's only about 15 pips south. If we do get that pullback, then we got a real good chance to get long. The question is if I'm already long, do I want to hold? You could certainly hold. If you're way in the green, you could certainly hold. I definitely would say that if I was entering a new position right this minute, I would wait for a little bit of trade location. But if you're long and you want to stay the course, stay the course. Anna Mako, hello, Shane. How are you? I'm doing great, Anna. Welcome. Welcome, everybody. If you have any questions, be sure to drop them into any live chat functionality, and I'll do my best to get around to them. I want to give a big shout out to Natchman's Seafood Market down there in Reddington Beach, Florida. Actually had an opportunity to buy a ton of your shrimp this last week. Picked myself up a shirt. Also got some grouper. Absolutely great fish. Fantastic fish. If you're ever down in Reddington Beach, Florida, which is down by Tampa, sort of on the St. Petersburg side, Gulf Coast shrimp, nothing better. Natchman's was an absolutely fantastic outfit, and I enjoyed it a lot. If you like shrimp, you can't beat it. So a lot going on here in the Euro USD. A lot going on in our markets. We got a couple things that we need to cover. If you're not already following us on X, we just started out our How to Trade X channel. We got 37 posts. There will be a lot more, but you can catch all sorts of things. You can catch our live streams here. You can also catch our trade ideas. Our trade idea right here that we put out earlier today on Euro USD. I'm going to have an abbreviated version for the trading room with key levels, but definitely if you guys want to follow us on X, feel free to do just that. We're sort of just getting started there, so I don't know if I would expect a tremendous number of posts coming your way very often, but definitely are going to be headed that way here in the coming, I would say, days, weeks, and months. You'll see some more content there as well. So let's see. Delebi, good evening, sir. I hope you're doing great. I'm doing great. I feel good. I'm getting ready to go into a huge key, really a key time to be in the markets. And what you got right here is your Tuesday economic calendar. Not a whole heck of a lot here. We had some numbers of CPI coming out of Canada. We're also going to look at the Aussie CAD here in just a second. But if you, in fact, wanted to really focus on an economic event today, it's probably going to be your U.S. retail sales. So we're going to go ahead and preview that as being our fundamental of the day, and then we're going to preview tomorrow's Fed announcements. Travis, good to see you, Travis. We're going to preview tomorrow's Fed announcements and talk a little bit about what we can expect from the Federal Reserve, interest rate expectations, preview FOMC live, and see if we can't get in there and get the job done. What I do want to say right here, though, is you did have some CPI releases. This is our economic calendar on how to trade. If you need one, go ahead and check it out. But we did have a big range of numbers that came out here for the Canadian dollar. So, I always say that you take a number like, I don't know, the consumer price index. In and of itself, it doesn't mean anything. It really doesn't. It's like, oh, the CPI is 217.8 or the CPI is 0.2. It doesn't mean anything. What does mean something is that, what exactly was the number with respect to what we expected and the previous release. That's really what we got to dial into and get accustomed to, really evaluating these figures from that perspective. That's called relative analysis. So just looking at these numbers, the CPI came in at 0.1. We were looking at a previous, so it actually came down a little bit. That would be probably dovish for the Canadian dollar. And then also your consumer price index here came in at 2 year over year, estimated 2.1. So not too bad of a set of numbers. Now, I'm a hybrid trader. So what that means is I really don't care what the numbers say. I don't care what they say. I'm not interested in sitting around going, oh, that's a big number or that's a big number. I just want to trade it. And I know that when the numbers are coming out, I'm going to have a chance to capitalize on volatility. That's absolutely key. So I'm a hybrid trader. I look for those periods when the markets are going to be moving, and then I fall back on my technicals. Well, this is a good look at your Aussie CAD right here. And we know the Canadian dollar is sort of on the move today. We'll look at the loonie here in a second, but there's one real big level that I put out the other day that we need to be watching. 92.64 is 2024's highs. I like trading that to the short side a little bit better than say that last order block I just showed you. So this right here, little doji up here, not too shabby. Not too shabby at all. I'll be looking to short right in front of that. We put the trade ID out yesterday. I have a feeling that we're going to get there relatively soon. 91.80. I believe we're selling 92.50s or something like that. It's only about 80 pips. I think that if we do get that chance, we got a real opportunity to trade there. Now, if you wanted to trade the Aussie CAD right now, I would say, well, what do we got? Something like this. 38% is 91.31, so you get a retracement down there. That's probably a pretty good bid. So right now we're in no man's land. We're sort of 60 pips or so away from our top side entry to the short, and we're about 50 pips away from a bidding opportunity, and that's fine with me. I'm looking for price to move. I want it to move so we can get in on that short-term disequilibrium, step into the market, and take the points. Remember, price has to be out of whack before we can capitalize and make the money. That's what we got to focus on. Remember, we don't trade all the time. They pay us to wait. And I always say that if you can get 10 or 15 solid trades, maybe over the course of, you're not going to want to hear this, but maybe over the course of maybe a 2-week period or maybe a 10-session period, but you get 10 or 15 real good intraday trades, you're going to walk away a winner. Now, I'm not saying that's the only way to trade. You can go down to a 1-minute chart or a 30-minute chart and really get involved repeatedly all day long. And as long as you have a good strategy and a good way to trade it, you can be profitable. But I'm patient. I try to be as patient as I possibly can. I wait, and then I wait a little longer. And typically I find the longer that I wait for my levels to come into play, the more successful I am. And I'm looking, be real honest with you, I'm looking to win about 80% of my trades, 75 to 80% on a 1-to-1 ratios. That's what I'm looking to do. I know that's lofty. You're probably not going to hear anyone else in the financial world say, yeah, let's go ahead and trade that. That's what I trade. I look for 80% winners. If I can get that, I'm going to be a happy camper most days. And that's what I want to be. I want the path of least resistance. That's what I'm interested in. Bobby Bob, good to see you, Bobby. Let's see. What time frame do you usually use to make an entry? Yeah, MWE or MEW. Well, I mean, right here I'll show you. It depends on the market. So I'm going to sort of break down exactly this gold trade that I've been eyeballing for a while. But intraday Forex stuff, 4-hour and 30-minute charts. I would only use a 30-minute when we're very active. Probably tomorrow might be a good day after the Fed. But futures, equity futures, my money is 30-minute charts, and then I'll take it right down to a 1-minute chart to watch price action. I don't go under 1 minute. Maybe I will in the future. I've watched 30-second charts and 15-second charts before. For me, I just sort of I think in terms of blocks of time that means something, and I'm on a 60-second scale, so the minute chart's about as low as I'll go. I won't base entries on a minute chart, though. I will look at trade management on a minute chart, and that's helped me. So 4 hours, something like spot gold 4-hour is absolutely what I would be focused on. It's a 24-hour commodity. I want to be involved. I want to be basing my decisions on that 24-hour cycle. Meaning I don't want to ignore any time with gold unless I'm trading gold futures. That's different, though. We'll talk about futures and volume some other time. Spot market. This is really a great look. This is a diagram that I drew up the other day. We're making a video that's based on beat the moneymaker strategy or market maker strategy. And what this really was a great case study in market makers and what they do to price action. And you can see right here was our all-time high established back on the 20th of August. And then we got that long-term consolidation. And we had so many failed auctions up here. Failed auctions when we try to drive either higher or lower, and then the institutions step in, hit price, and it reverses. One failed auction, two failed auction, three, four. So really turned into a period of consolidation and a lot of failures right up at our all-time highs. Until when? Until we finally broke. Now, when we finally broke above our all-time high, all those retail shorts that were trading this consolidation, trying to make money out of the middle of the market, all those folks were in a position to be stopped out. They couldn't hold their shorts any longer because when we got broken out, when we got this big sweep of volume that came, they don't show you volumes I could show you on the futures markets, but we'll get to it. Spot gold, typically you don't see any volume data because everybody's so tight-lipped about gold volumes that it's really tough to get any information. But this big rush of price, because of where it started, you definitely have to assume that there was institutional participation there. And once those orders hit right above that all-time high, that was like a bomb going off. All those shorts had stop losses right up above that all-time high. They all got run. What is a stop loss for a short or a sell order? It's going to be a buy order. When the buy orders got hit, the momentum algorithms watched, and as soon as they saw that, they said, okay, we want to be long. That's easy. That's beat the market maker strategy, understanding where you're going to break off and understanding just where to be short and where to be long from. We try to do that on every one of these streams saying, I don't know if I'd be short. I wouldn't be short right now. Now, some folks are cleaning up. They really are. We had a high right up in the vicinity of 2,600. I talked about maybe selling up there. Let's go ahead and get rid of all this rigmarole and see if we can't get a good look at get a good look at this gold. Now, this is just price action. I took all my indicators off the charts because you don't need them. Riverlay, good to see you, River. Welcome. You don't need to see all the indicators. All you need is price action. Well, right here, you sort of got a big rounded top. So one of the areas that I was very adamant about potentially setting up a short-term resistance was 26. Why? It's a big round number. Well, we didn't quite get there. We went right up to 25.89 and we sort of came off. That's the tough part about maybe stepping up and selling based on a key number or an area of natural resistance is you don't know where it's going to stop. And I fought with this for a decade almost. And at the end of the day, I figured I shaded a few ticks, or I put my risk where I want to put it. And if the market fills me up and makes me whole, great. If it doesn't, I got to go on to the next trade. This is frustrating. 25.61, we were up there probably 25.94s. That's where I wanted my sell, somewhere in there. 95s, 97.50, probably scale in a little more there. We didn't get it. We got to let it go. But now, look at what we're going to have a chance to do. There's two options for us right now. Number one, we can look for a buying opportunity. I want to be long gold. I want to be long with the trend. Okay. The other thing we could do is we could look to sell on short time frames. All right. We're going to do both. So this right here, this is a good look at a 4-hour, really a break. There was our big time break above our all-time highs, and really was really triggered off a nice uptrend, a nice run, and now your pullback is coming right down to 25.60.05. I don't really know that you can go wrong bidding that level, 25.60. You see right there, you've already got a $2 bounce, $2.50 bounce. So that was a healthy move and a healthy scalp. But let's say you wanted to wait, 25.41, 25.42, probably going to be a great move. Can we adjust the time frame maybe to get us something a little more concrete? Of course we can. We can always adjust the time frame. Right there is going to be your spike low. That's back on the let's see, what was that? The 6th of September, September 6th. Spike low there. There's your retracement zone. I can tell you right now with I can't say that legally. I can't say things like 100% certainty, or I can tell you right now that you have a decent level to work with right there. I know that's sort of a cop-out. That's like saying, well, you know, we landed on the moon. Maybe we landed on the moon. 25.50. That's the steak. That's not the potatoes. That's not the salad. That's not the appetizer. That's not the plate of shrimp you get before you get the steak. That's the steak. I want to be long gold. I have a bullish bias. We're still, believe it or not, even though today is a big correction, 0.75%, you got the Fed coming on tomorrow. They're going to cut interest rates by 1/4 or 1/2. We'll talk about that in a second. All of it sort of points toward bullish gold. 25.49.96. I'd be looking to buy probably 20. I mean, if you wanted to be aggressive, 25.52s, maybe 25.50.50s. That's more conservative. And then if you do, in fact, get an opportunity to get long down there, it's tough to imagine a scenario where we get swept out and lose. So definitely want to say that. Shane, how do you execute? Well, if I was aggressive, and I am, 25.52.50s, stop myself out probably at 25.47.50 right beneath there. That's a $5 risk. You're looking to make 5 on that. If you're trading spot gold, you're going to have to bring that leverage way down. You have to bring that leverage way down, and if you do bring it way down, you're going to have an opportunity to let that trade play out. So I'm looking to make money on probably a $5 move here. I think that if you don't get a $5 bounce off of that zone, then I will deem it a failure. However, if you want to play it tighter, maybe you want to buy 25.50.50s, you could wait for that. Maybe you get it, maybe you don't. You could easily get probably $2 profit there. Stop yourself out underneath 47.50 probably. That's what I would say. Without being able to do this in real time with you, that's about as good as I can do for a stop loss location. The big thing we want to watch is if the Fed does do something crazy and the gold markets react in a big way and you see that big sweep, you want to make sure that we're not in the way. If this goes against us, we just get out and we come back in at 25.25. I love the way this Fibonacci sequence is set up. Big round numbers are huge. When Fibonacci's sort of coincide, when they coalesce, then you have real good trades. That's a pretty good sequence, guys. I'm excited about it. I think the most difficult thing we're going to have is, do we in fact get a retracement that gets us in? That's what I would say. Steve Moody, good to see you, Steve. I'm new here. I like that you break things down in layman's terms for us. Sending you love from Cali, out on the West Coast. California is probably a little bit warmer in Cali than it is here. I'm up in Dillon, Montana, and it is raining. And it is sort of chilly, so about 60 degrees today. So, hey, listen, we had a lot of forest fires, so we'll take the rain and we'll take the cool, get us some clean air, get ready for a big-time football Saturday with some clean air. In any case, right there, that's what I'm looking at. If you wanted to trade it intraday today, I don't really have a problem with going short. You'll notice that we're just working straight at price action here. I think we're a little bit late to the party, but right there, sort of your opening bell, your cash open, ding, ding. Then you sort of had the head fake to the top and then the big plunge. You could do something like this late in the day, just is really targeting that U.S. session. I just don't really know that I would do it. I think that's sort of a high-risk trade, 25.69 though to the sell, and that would definitely be a scalp. It'd be something if we went to a futures contract, you can clearly see where the volume comes into the markets. There's our retail sales numbers. Boom, boom, and we stay relatively consistent, but it really, thing with COMEX gold is it really tapers off towards the end of the session. You don't have much time before this thing just goes like this. So if you were going to trade this, at least according to what I do, and we'll cover some strategies later this week after the Fed, we're going to stick with the Fibonacci's for now. I want to sort of deliver what I know best when we need to know it. And if, in fact, we get a chance there, 25.95.8, that's December gold futures. You're probably going to have a pretty good entry there to the short. One last metals, and then we'll cover our fundamentals of the day, and then we'll come back and pick up the U.S. equities indices, and then take a look at U.S. oil. Yeah, let's go. Let me see. Steve Moody, I'm a Bitcoin risk manager. Right on. If there is such a thing. Let me see. Okari, hey man, I love the game here. Texting from Nigeria. Well, welcome. We got California. We got Nigeria. I know we've got Australia in the house. So yeah, it's good to see everybody. We're truly global. I want to thank everybody for joining us. I'm streaming out of southwestern Montana, and it's great that we got folks everywhere. We got folks from Switzerland in here. We got folks from the UK. So it's absolutely truly a global community. If you have any questions you want to ask me directly, check out the How to Trade trading room. Be sure to send me a private message. I will get back to you in short order. Have really learned a lot. Connor's a fantastic analyst. I do my best. So we do my best. Let's see. Mark Corp's from Panama. He's down in Panama. Right on. I've been to Costa Rica. I've never been to Panama. We were right down on the Panamanian-Costa Rica border. Down there doing a little bit of fishing in the mangroves, and I could not believe the size of the crocodiles. Holy cow. 1 ton saltwater croc scared the bejesus out of me. In any case, right here, this is silver. I like this. I like this trade a lot. I don't like it as much as the gold daily chart, but this is a pretty darn good level right there, 29.78.94. Maybe that 30. Do we have any time frame that gives us a chance to buy on the 30? Not really. There's your 30-minute chart, and it's definitely a downtrend today. Let's go right to our 4-hour. This is what we want to see. It's just too sloppy. I mean, your instincts would say run a Fibonacci right from that spike low up to this spike high, but I really want to stress that this price action, for lack of a better term, is ugly. And anytime we get into real choppy market conditions, I'm not real fond of playing Fibonacci retracements. See right here, you sort of already got the trade. There was your low, there was your sort of your spike low, there was your top, and then your pullback was right in there. I would be out of this trade on a 4-hour time frame. Play your daily. More than likely, you're going to have a little bit better luck. A little bit better luck there. So let me see. Bobby Bob's in Kenya. Wow. Man, what a global scope. What a global scope. So we've got pretty much all the markets represented here. We've got the U.S. time frames. We've got the EU time frames. We've got the Asia Pacific time frames. It's outstanding. I always got a lot of respect for the Asia Pacific folks. It means they're up in the middle of the night. That's for sure. But hey, I'll tell you what, going into tonight's CPI, I might be joining a lot of you guys for the London session. So we'll just got to wait and see. I think that EU CPI number is going to be a big one. All right, guys, we do have some fundamentals to key on here, and I want to really cover them. Remember, if you don't have a broker, check out Switch Markets. They got a credit bonus there. Feel free to dive on in and see about picking up yours. Remember, that's a credit bonus. It's not cash, so you can't just deposit and then withdraw and take the money. They'll have a close eye on you, but it will help you boost your purchasing power. Definitely something to think about if you don't have a broker. Let me see. Mew, can you guys make a video topic about growing a small account? I want to start trading as a side hustle. Check out our trading academy in the How to Trade trading room. We made one on leveraging and compounding returns. If you private message me in the room, I'll try to point you in the right direction. I honestly don't know where it's at, though. I'd have to go digging for it. I think I made that one last year. Something to think about. Let me see. I love to take swing trades outside of value areas with CFD divergences of volume. Nothing wrong with that. The idea behind a value area is everything comes back. Everything comes back, and a lot of times when those value areas are established, a real firm point of control around a big round number, can't miss. A lot of times you can't miss. The challenge for us as traders and independent business people is being patient and waiting for those to come to us. When they come to us, that's one of the things that I don't like saying too much about leverage and size because I know a lot of folks are just starting out, and I don't want anybody. That was the first rule I learned. My first mentor, Gary Vernier, he traded size. When he traded on the markets in the 90s, he was making millions. He was trading big-time sizes. And then when he went to the screen, he took the sizes way down because they didn't have the same edge they did in the pits, but still traded relatively big size. So I would ask him, I'd say, what are you trading? And he wouldn't tell me. He says, I don't want you thinking about millions. Make pennies and then you can make dollars. If you make dollars, then you can do whatever you want in this market. That's all there is to it. So when we start talking about, the market coming back to an area or putting on size and being able to earn a lot of money, I really discourage anybody from really telling anybody else how much they're trading or size because it turns into an ego competition. And I won't say that. Very rarely will tell you how much size I'm trading. But it's not very big. But for a beginning trader or an average retail trader, it's a little bit bigger than normal, I would say. And if we're not right and we trade size, it can really get away from us. So I don't want to focus on size, but I want to focus on the market moves and how we can make a little bit of money. So when we talk about compounding returns, everybody gets pie in the sky because you start winning, and then a little while down the road, your size becomes so epically huge that all of a sudden you're like, oh, wow, I can walk away with $5,000 or $10,000 a day every day. And just remember, when you leverage up and you get hit, you leverage down, you lose just as fast as you make it. So consistency, every single day we stick to our plan and we do the best we can to be really tough, good, solid traders. And if you can do that, things will take care of themselves. The money will take care of themselves. It really will. All right, everybody, there's a couple things that we need to cover here today. I would say that today, on a scale of 1 to 10, probably not the best news day in the world. It's always tough when you're trading pre-Fed. Fed's coming up tomorrow. Typically, everybody's sitting on their hands waiting. So right here, this is the weekly schedule. FOMC live tomorrow. I'll have that live for you, 2:20 Eastern. About an hour and a half later than I usually go. We're going to have Jay Powell's live presser. Tomorrow's huge. We'll get to that in a second, but that was the big one. Today was U.S. retail sales. Thursday, we've got the BOE. Connor's going to have that for you. And then we got the BOG on that Friday, that U.S. overnight session, but that early Friday Forex session, the BOJ is going to send the dollar yen crazy, and we're going to be all over it. So that's what we're looking at here for the rest of the week. Great week, epic week, red letter week. Remember, Tuesday through Thursday, psychology, pedal to the metal, all systems go. Trade our plan. We're looking to make money. We want to make money right now because liquidity is in the market, and this is how we capitalize. Good, efficient markets. We place our trades. We get in there and try to hit our weekly target and our weekly P&L. All right, retail sales is going to be our fundamental of the day. What are retail sales? Retail sales measure the change in the total value of the sales at the retail level. What does it mean? It means that people are buying things. That's it. Retail sales is when we show up, we go down to wherever we're going. We pull out the Ridge wallet, we pull out our ducats, and we buy. And if we buy things, that means aggregate consumption's high. That means economic growth is likely to move forward. That's it. That's all there is to it. Retail sales, what is it? It's just a measure of consumption. Indirectly, it's a measure of consumer sentiment. When it's higher than expected, it's going to be bullish for the U.S. dollar. And when it's lower than expected, it's going to be bearish for the U.S. dollar. So let's go ahead, take a look at what we got today. The verdict is in. Core retail sales came in. And core is just retail sales without a few items. We're not going to focus on that right now. 0.1%. We expected 0.2%. Let's see. Retail sales, 0.1%. Over negative 0.2% and down big from the previous release. So even though we came in better than expected, still way down from the previous release. Does that suggest an economic contraction? I think the jury's still out, but take a look at the year-over-year number. I think is really a damning indictment of where we're at and how much those interest rate changes are sort of beginning to grind into consumption. And that's why most people believe we have a rate cut coming tomorrow. 2.86% down to 2.13 adjusted seasonally year over year. That's crazy stuff. I mean, that's way down. So the verdict is in. That's where we're at. This is the monthly figure. You'll notice right there, boom, you got the big robust figure out of July, and then we came down in August. So now we're really starting to think that maybe that quarter point rate cut that we were promised is going to be a half a point rate cut. Now, before we get into really handicapping the Fed, I do want to cover a little bit of this intraday because I see a good move happening right here in the E-mini S&P 500. I got a great question from a futures trader earlier today. Looked at his charts, looked at his ticker, and said, Shane, it's showing the E-mini S&P 500 trading about 25 points away from where my dom's trading. What gives? And I said, rollover is the number one thing you got to be aware of if you're trading futures contracts. Equities index futures are quarterly. That means they roll over 4 times a year. It's easy to forget those. It's real easy to forget those. So today was rollover. It was rollover day. So thank you for reaching out and asking that question. I'm glad I could help. The biggest thing you always got to remember is if you're looking over here, this is my watch list. I got everything on there. I'm always looking at it. I can't really trade without a watch list. I'm always looking at it. I'm looking for opportunities. Now, anytime you see your chart or the watch list showing a number that is not maybe popping up on another feed, I typically am watching a few different things to make sure that everything's in line. Odds are if it's a futures contract, it's a rollover issue. And I want to point this out right now because if you're trading the E-mini, you should be trading the December contract, okay? Now that's now where the volume is. That's the new front month. But take a look at the US 500 CFD. That's based on the S&P 500. So take a look at it. E-mini, what's happening? You have a discrepancy. You need to be very careful with that type of thing, especially as we go into rollover. A lot of those CFD contracts track a futures contract as its pricing mechanism. You need to make sure that when rollover's coming up, you're aware of it. If I'm trading the E-minis, I need to know when my rollovers are. Euro FX futures, the same. WTI crude, gold, all of them roll over at different times. Natural gas, all of them roll differently. Always be aware of where the volume is. As soon as the majority of the volume switches to the next contract, that's your new front month. That's the one you need to trade as a retail trader. Also, last thing I'm going to say about it, a lot of times when you have that rollover period, you'll have a couple of sessions where it's about a 50-50 split or a 60-40 split between volume. In this case, it was volume between September and December, E-mini S&P 500. That volume split can really lead to some crazy price action. So if you're technical based or maybe if you're a trend trader or something like that, you need to be aware that that volume dilution can make those markets thinner and more susceptible to market sweeps. Just something to think about there. Let me see. Steve Moody. Average for me is 1 to 10 Bitcoin per trade. Wow, that's a monster holding. But even if I'm wrong, I get break even or a tiny profit. Yeah, I mean, if you've got the liquidity to trade something like a multi-Bitcoin, if you're doing that on cash exchanges, you have the ability to hold because you're not doing it leveraged. Now, if you're trading like a Bitcoin CFD or maybe a micro Bitcoin futures and the market goes against you, you kind of are going to have to get out just because of the financial pressure. But if you're buying things on cash exchanges like stocks, like Bitcoin, it's absolutely fantastic. Let me see. Another question here, and then we're going to get into a few of these things, and then we're going to wrap it up with our Fed preview. This is a good look right here. E-mini S&P 500. I know we have one of those traders in here. This is a good look at your U.S. session. Look at where all the volume is. This is beautiful stuff right here. I would be watching that 38% relatively closely. Sort of, it's not a trend day. It's a rotation day. So if you wanted to trade that, I would say, yeah, you could. I think it's already been hit though. I would be waiting for a deeper retracement. I really would. You can see during the overnight, we had this nice big rally, and then we sort of crashed down during the U.S. session. Are we trending right now? We're not trending. During the U.S. session, we're down a little bit, but we're not trending. If I wanted to get maybe a cleaner look at what we're doing, I would definitely turn on my other indicators, which are Bollinger Bands. It's not a trend. Do I want to sell right there at 57.01? I think it's marginal at best. I really do. If we had a steeper slope and more of a sell-off, I would say do it. But I would be looking more towards that 62% retracement, which is right up there at 57.15-ish. I think that's probably going to be a better trade for you. Definitely something to think about there. Let me see, Anameka, what can you say about the Aussie 200? Okay, got a couple questions. Then the Aussie 200, we will be sure to cover that as well. Let's just go ahead and hit that now. Let's see. If you guys have any markets you want to look at, I'm more than happy to. Now, that's more of a trend to me. So what we just did on the E-mini S&P, you can see right there was your U.S. retail sales. So during the U.S. session, that's, again, where all your volume is, even though this is a foreign or international indices. You had a nice big sell-off there. What could we really say about, trading this thing? Is it a trend? Well, we're off quite a bit from that high. That's just current wave stuff. I would be looking probably to short that 38% right around 81.34.7. From a macro perspective, if you wanted to sort of get a market call on where we may be going, this is, certainly this is pretty good stuff. I mean, you're sort of on the cusp of a bullish breakout here with this Aussie 200. Compression, sort of a break and a retracement. Something like this. I'd be looking to bid 38%. Today's close is going to be huge. Because if you do, sort of rebound and close outside of that upper Bollinger Band, we'll be looking for a topside breakout. But this is a classic sort of that failed auction concept that I'll be talking about in our Beat the Market Maker video. That's pretty much what you're looking at. Head fake, and then the seller step in and dominate the action. If you were looking to play this, I would be bidding 38%. Is that the best location? 62, this golden zone down in here. Between 80.62 and 80.33 would be a much better location. But that 38% is not bad. I mean, in a perfect world, we would really capitalize on this bullish sentiment and just sort of mill sideways. And if that's the case, then 38% buys are going to be winners. Something to think about there. Let me see, CAD yen. Absolutely, we'll look at the CAD yen here in just a second. And what's going to be on tomorrow with the gold? Yeah, I covered gold to start off with. I went into depth. Check out the stream, Okiri, right from the beginning. Gold we hit right off the bat, and I gave you a game plan for it. There was a huge level in play coming into view for gold, and it's going to be fantastic. I got a feeling. So that's what I would do with the Aussie 200. Let's see here, CAD yen. All right, CAD yen, and then we're going to go ahead and preview. We're going to preview tomorrow's Fed meeting. Daily, sort of a spike high and a retracement. I mean, I could definitely build a retracement zone like this, but it's not our best one. You could short it right now if you wanted. Back into the golden zone. I don't hate it. It's just not the biggest range in the world. Sort of just thinking out loud here. So if you don't understand what I'm saying, it's okay. Heat is definitely on 104.42. If you wanted to short right here, you could. Just beware that you're going to need to stop yourself out somewhere in here. I don't know where you would put that stop loss. I really don't. Something like this, 78%, 104.86, right? Shorting right up there around 105. Probably going to be a pretty good trade. I like that one. I like that one better than this one, but it's tough to ever pass on a golden zone trade. If you had to right now, you say, Shane, long or short, it's a big up day. We're trending. We're up almost 1%. I would say, well, if you're going to try to pick a top, this is probably where you'd pick it from. You'd probably look to sell right now and get that rotation back down at least towards your 50% level, if not all the way to your 38%. Do I think there's a better trade out there? There's always a better trade out there. And I mean always. And one of the reasons, why do you think the CAD yen's rallying right now? Crude oil. Crude oil's way up today. We'll close with crude. Weekly. Just going to sort of reverse engineer this. I haven't looked at the CAD yen in a while. This is beautiful stuff right here. Boom, boom. And then the big sell-off. Made a lot of money shorting that 38%. Let's go right here, though. Well, what can we do right now? Well, we do have another range. We have a decent range set up right here in the last 3 weeks, 2.5 weeks. Spike high, spike low. There's your short, 105.20. That would be it. So like 105.15 probably, somewhere in there. I would wait for that. That's a pretty darn good level. If you want to trade that golden zone on the daily chart, I couldn't really argue with you. Why is the CAD yen up today? It's up because of U.S. oil. U.S. oil's up as well. Absolutely, Anna. You're welcome. You're welcome, Okiri. I hope I'm saying that right, guys. I'm not real. I barely speak English. I barely speak English. I was a finance major. I wasn't a foreign language major. However, there's no excuse for me to not be able to speak a foreign language. That's something I need to rectify in the next year. Maybe I'll get some of those tutorials and start listening to them in my headphones and practicing. All right, guys. Tomorrow's Fed. This is absolutely huge. You're welcome, Travis. Does the Fed impact the Forex? Yes. As much as anything can impact the Forex, the Fed impacts the Forex. So when we're talking about potentially looking at the U.S. dollar, understand that the Federal Reserve is really the end-all, be-all when it comes to driving the dollar. A dovish Fed means what? It's bearish for the USD. That means the dollar index is going to fall. The USD is going to lose against the majors. If we're hawkish, it's bullish for the USDs. Expect strength by the USD against FX majors. Going into tomorrow's meeting, remember this. Because it's not just going to be about the interest rate cut or the interest rate non-cut or the interest rate big cut. That's going to be a big portion of it. But it's also going to be about the verbiage. It's going to be about the verbiage that Jay Powell uses when he has his press conference. We're going to be there live. We're going to be on it. We're going to be on it. So I'm very much looking forward to this. Remember this, though. This is the relationship to the U.S. dollar. So what do we expect? We expect a half point or a quarter point rate cut. Right now, this chart, this I took off our economic calendar, is expecting a quarter point. That's not so fast, my friend. Next meeting's in about a day. We'll be going live shortly after today's time tomorrow, and we're going to get all over it. This right here is the current state of being. The markets are expecting a 61% chance. CME FedWatch Index, these are futures traders that are pricing their interest rate expectations. And they are pricing a half a point rate cut at about a 61 to about a 60-40 split. So this is a half point cut. This is a quarter point cut. This is absolutely huge. It really represents a quantum leap over last month at this time, 25%. We pretty much had it nailed for most of the last month, and then things just absolutely flipped last Thursday. I talked about that on Friday and exactly why we think that may have happened. The missile embargo, the restrictions, long-term missiles going into Russia, and then over the weekend, I'm not saying that anybody knew it was coming, but there was another assassination attempt on Trump, and typically you cut interest rates big when you're worried about things like economic growth or geopolitical uncertainty. That's what that means to me. 60% now looking for a half point. I don't know what's going to happen. No clue. My gut says a quarter point. My gut says they should keep it flat and not cut them at all because inflation's still way too high. Take a look at what's happened to the dollar index, though, over the last 8 hours. We really are rallying big. So if you do take a look at the daily, something like this, boom, what do you have here? Spike high, spike low, and then you're sort of looking at basic, just another Fibonacci for you. That would be your sell 101.06. Now, as far as the dollar index goes, I'm sort of focused on what exactly is this market doing over the long run. And take a look at what you got here. This is a vintage L formation on the weekly. What does that mean? Run, rotate. Okay? What does it mean, though? It means that your trend is still intact. There's your trend, and you're sort of meandering inside of it. Now, I would definitely go to a Fibonacci and sort of give you a broader look at this thing. Something like that. You can see we're still very bearish. We're underneath 38%. But even if you brought this zone down to the most recent spike, which is what I would do, you're still bearish. That's a textbook L formation. In my opinion, this looks like the market's gearing up to make another leg down, and I think that'll come on a half-point rate cut, not a quarter. Is it baked into the cake already? I think it is. I would be ready for U.S. dollar strength tomorrow. Be ready for the upside of this market, just in case the Fed only cuts a quarter point and then says, hey, this may be it for a while. We got to wait and see exactly how this pans out. So it's definitely going to be a huge session. You can already see it in the gold market. All right, we getting all sorts of messages on gold. Let's see, Mark Corp. Thanks. Looking forward to tomorrow. It's going to be big. I don't think they are bold enough for a half percent. I don't know, Mark. I got to tell you, the entire game changed last Thursday. So definitely a downtrend. If you want to take this thing back and really walk it back to a chart that I've looked at repeatedly over the past, I've already been doing this almost 3 years now. This is what we've been looking at for all these months. This was a zone that 2021, that's when we shifted policy. We shifted policy out of unlimited quantitative easing, unlimited rate cuts, and started suggesting that we were going to hike rates. There was your massive rally in the dollar. It wasn't because the dollar was strong. It was because all the other global currencies were weak. Then you came down, and we've rotated down. That 66% buy was fantastic. We were all over that about a year ago, July. I was yelling from the mountaintops on that one. But right here, we're coming back down to that level again. I think we trade it again, guys. I think we trade it and test 99.30. If that level goes, 95s, if we see a big-time sell-off on the dollar like that, look for your risk assets and everything to explode. Definitely. All right, one more market, and then we got to go ahead and stick a pin in it. What's happening in the gold? Apparently we got big movers in gold. There you have it. Oh, 25.50 is a beautiful thing there. I'm excited about that. This was our 4-hour that I sort of put up here, and we went right there with our breakout. There was our break above all-time highs, and then right there. Oh, never mind. That worked perfect. 25.61 and then a bounce. I mean, I don't know. That's what you look to do. That's the whole idea behind trading, is to get good location. U.S. oil, this was fantastic. We've been talking about the top side resistance levels for oil. We traded 70 repeatedly. Well, we can always change our minds and flip, especially if we've got an absolutely fantastic retracement level. U.S. oil right there. There's your spike low, your low made on the 10th of September, and then the big rally came in, and then we got to pull back today, and then we got to bounce. So right there, if you're looking at U.S. oil, you're saying, okay, we're about at 70.17. That U.S. oil CFD is not rolled over yet. You're at 70.18. This is pretty much the price. I believe this is the price of oil right now. It's going to be up around 71.44. That's going to be your front month futures. So be careful. Be careful with your U.S. oil contract. They do roll these things over, and when they do, the pricing gets crazy. So if you're trading U.S. oil today, at least through that TVC, you did very well there. But definitely be ready for a big-time shift in pricing when they roll that CFD over to this. What is V? October? To the October contract, which is the new front month. You can see that things get they don't get convoluted, but they get complex. And that's the difference between being a novice trader and a professional. A lot of novice traders miss things like rollover. They miss things like a news cycle. Always know where your economic calendar is. Always know where your futures contracts are. And always know what your CFD tracks, what the underlying asset is. And if it's a futures contract, always beware a rollover. All right, Riverlay, we'll take it easy. Good night. It's tough out there in the Asia Pacific. It's late. So get some rest and get ready to go for Fed Day. For me right there, 72 is sort of a no-brainer sell, at least for a scalp on WTI crude futures. And you can see we already got it. So I would be on the sidelines here probably for the rest of the day. If, in fact, you wanted to bid, you could do something like that with a Fibonacci, but once again, we're just behind the 8 ball here. We're too late. Too late to the party. Sometimes that happens. All right, everybody, I want to thank you for joining me today. Big shout out to Natchman's again. Great seafood market if you're in the Florida or the Tampa area, or if you're on Reddington Beach, go ahead and check it out. Other than that, this is going to be an epic news cycle. What can you say? We've got Connor up next. He's going to preview the huge Fed decision. Don't miss that. He's going to line you up. I gave you a few tips here going into the session. I'm going to have a Euro USD trading plan out for you, posted in the trading room. Then we'll probably throw it up. Well, it's already up on X, so you can go check it out there. But definitely, if you're interested in following us on X, great. If not, that's okay too. If you want anything, private message, private dialogue, hit the trading room up, howtotrade.com. and then go ahead and send me up a news cycle. We've got a lot of messages today, and that's fantastic. Always love to hear from everybody. Let me see. MWE, people on the internet are making content or courses about Forex for money. I heard of those people. You guys are giving it away for free with dedication. High thumbs up to your whole team. Thank you, MEW. I appreciate that. We try to do our best to help traders. I've got that question a lot recently since the platform sort of went to a complimentary type of a status. So, what can I say? We like to help. We like to help. Cruise on by How to Trade. Also, we've got a whole bunch of stuff that's happening on YouTube as well. Lots of video posts. We're posting 2 videos a week to the How to Trade and Forex Signals TV channels. Check those out, and also 4 shorts a week as well combined. So check those channels out and see if there's something there you may like. All right, everybody, I'm going to go ahead and sign off. Or striking a sell for the, I'm not selling anything. I'm not selling gold, not right now. You guys can, feel free. I'm waiting for my level because I know if I get my level that I outlined, I'm going to hit it. I know it. All right, everybody, trade the action well, and we'll talk soon. See ya.